Hello everybody and welcome to Raging Bull Academy mentorship program. This is our first lesson that we will be teaching you. Our main focus here is for you to walk away with more knowledge, and you can make better trade decisions at the end of this lesson. This is more of a beginner intermediate type of lesson. You need a little bit of a background in the sense what candlesticks are, the type of patterns, looking at charts, but I will try to go as slow as possible and make you understand the science behind it. What I want you to do is take out a piece of pen and a piece of paper and a pen, and let's get started. So first thing first, things to note, there's no single secret method. All traders have different types of methods that they use. Some of the top traders just stick with the basics. Basics like candlesticks, trend lines, different type of patterns that they look at, volumes, moving averages. They just use the basic stuff, and stuff I mean by indicators. Some traders go in advance. So right now I'm gonna try to teach you the basic, and then we can take your trading to the next level. The reason why I was doing this is because most of the people, due to pandemic, came into the stock market. There was an influx of traders that came into the market. Now, most of these traders don't know what they're doing. They're just following the hype. Somebody says something on Twitter, or somebody says something on TikTok, or Facebook, or Instagram, and they just follow along and make the trades based on that. So some people don't know what goes behind the actual calls that people make and the research here. So same thing, but when you're done with this lesson, you'll make a better choice and better decision going into a trade. Now there's many types of styles of trading. There's accumulation plays, breakouts, and things like that, and volume plays. So I'll cover a little bit on those as well. Now there's a bit of experience required when it comes to looking at key patterns and stuff. So I'll show you some patterns. You'll need to study them. You can pause the video, take your time, get an idea of what I'm trying to tell you, or after the video, you can Google in patterns for stock market or Forex, and that will give you some idea and back knowledge, and you can add that on to your portfolio. Other thing is, always try to apply the things you've learned. So in the actual stock market, when you're making a trade, make sure you go in with all the knowledge that you have. Make mistakes. It's all about part of the process, and the more mistakes you make, the more you're going to learn. We've been through all of that throughout our lives, and so again, take your time, make mistakes. You want to practice on a dummy account, practice on a dummy account. You want to go live with the actual money that you have, go ahead. But here, my goal is, at the end of the video, you will have more knowledge and better idea of making trades, and you can make informed decisions based on that. Again, when I talk about sticking to the basics, I'm going to teach you the basics of trading. I play a lot of sports, and whenever our team loses, our captain or our coach always tells us, go back to your basics, do your basics. If you do your basics, you're gonna you're gonna succeed. You don't try to reinvent the wheel. Don't come up with your own ideas. Okay, let's move on. This is a funny graph. I actually did this on purpose because some of you are new. You have no idea what you're looking at or what you're getting into. I did this graph on purpose to make you understand what a lot of people go through. So let's suppose you're here on, you open an account for $10,000. You get lucky and you go up to about 15. And then from there on, you invest in another stock, and that ends up coming down and going at a loss, and you're back at your 10. Now, this is where a lot of you are right now. You're just struggling, going up and down from the account, and you have no idea what you want to do. What I want you to do is, from this lesson, I want you to go up. Take that 10, turn it into 20. Okay, you can do that with this basic knowledge. It's just a matter of finding the right stock, right timing, and the knowledge. Some of you will wipe out the account without having that knowledge, right? So this is just to give you an idea. What we want to do is slowly take you step by step. Okay. Now, what I'm going to cover is candlesticks, support and resistance, and risk management. Okay, now understanding the psychology behind candlesticks is very important. Okay, I'm going to also cover the type of candlesticks there are and the chart patterns to use with candlesticks and volume. Okay, candlesticks it's a huge chapter in the trading world. Okay, so if you're not sure what candlesticks are, pause this video. If you want to come back to it later on or after this video, get to study candlesticks. All right, that's one of the first components. Okay, next is your support and resistance. Support and resistance are horizontal lines, okay, that you make during your support and your resistance. Trend lines and moving averages. Trend lines, depending on which side the trend is. Moving averages, based on what the stock price is, it'll tell you what the moving average is based on 9 days, 20 days, 50 days, so on and so forth. In the risk management, I'm going to tell you in relation to support and resistance how we can trade and how we can control, and portfolio growth preferences. Now let's begin with our first candlestick slide. Now, when you want to look at, anytime you look at a chart, usually anytime you go and open up a chart, it gives you lines. So you want to choose that from the section I'm going to show you later on how to take those lines out and start the charts with candlesticks. Okay, so when you come to a candlestick, there's two types of candlesticks. One is your bear candle and the other one is your bull candle. Bear is coming down, bull is market is going back up. So how it works is, with each candle you want to be able to tell a story. Okay, so this is how I look at a candlestick, where you see open and close. Okay, this is where the market opened for that price. Okay, bulls came in, they pulled the price a little bit higher, so it made a wick. Okay, then sellers took over again and brought the price down to very low. And then bulls, what they did was they brought it back a little bit, but sellers were a little bit too strong, so they ended up closing at this point. Now this candlestick can be classified as a 1 hour candle, a 15-minute candle, 30-minute candle, 4-hour candle, a daily candle. It all depends on the charting that you look at. Okay, I'll cover that once I open up a chart for you. Okay, on the other hand, you have what it is called a bull candle. Okay, same thing. I'm going to do the same story. Okay, and the market opens up here. The sellers came in, they wanted to push the price down. They ended up pushing it at a certain point. The buyers were too strong. They took it all the way up high. Okay, and the sellers came back in and they closed it at this point. Okay, these are your bodies, open and close. These are your bodies and your wicks. Okay, so with every candle, it actually tells you a story based on what type of candle it is. If it's a bear candle or it's a bull candle, I'll tell you who's pushing and who's doing what. Okay, now just to go a little bit on the advanced side of things, this is a candlestick cheat sheet. Okay, what I want you to do is memorize this. Okay, as part of your learning curve, you're gonna actually see these and you automatically start memorizing this. Okay, the most important ones are your dojis, your hammer, the inverted hammer, okay, and your dojis. This is where it decides for the market what's happening, and some of the patterns that I'm gonna show you in a live chart, you're gonna see 3 white soldiers, you're gonna see a morning doji star, you're gonna see a morning star. I want to show you some of these engulfing bull candles. Right now I'm focusing mainly on the bullish side of things, because we want to buy stocks at a low price and sell them high. Now on the bearish side, if you're shorting stocks, that means you're going against the market, then you look at this side of things. Okay, now this lesson is for both stocks and your Forex. Okay, you can use all of this in both trade of things. Okay, so but in the Forex market, a lot of bulls and bears, that's what they're playing with. With stocks, I say about 70 to 80% of the people are trying to go bull. Okay, trying to make money on how high the stock goes. Okay, next thing I want to show you, I know I'm just dumping a lot of things right at you guys, is your pattern reversals. Okay, these are ones you can see continuation patterns and reversal patterns. Okay, most of the stocks right now in 2021, it's the first week of January in 2021, are actually within the bullish flag pattern, bullish wedge. You're going to see a lot of that. That's what's forming 1, 2, and 3. This is what's happening right now, because what ended up happening was in 2020 a lot of stocks went up and they started consolidating by November and December, and now they're going back up, or they're trying to build a pattern, and I'm going to show you that as well. We're going to put all of these together. It's going to make sense when everything comes together. Okay, so if you want to pause the video, you can read, you can see what it is. Continuation pattern, this is when the market goes up, comes down a little bit, consolidate, what we say consolidation in Forex, they tell you to stay away from, not to touch consolidation period. But in stocks, a lot of the times people are buying and selling, doing day trades on smaller positions. Okay, so here you have the opportunity to make money as well, but a lot of the times people stay away. I'm going to show you some patterns here, and then we'll go from there. Let's start with our support and resistance. Okay, so again, support and resistance comes in many forms. Horizontal support and resistance, they move up and down. I'll explain to you how the support and resistance work. Trend lines, very important quote is, trend is your friend until it bends. Okay, and bonus that I'm teaching you here, I wasn't planning to put this in, but I thought why not, since I'm teaching you all of this, let's give you guys another indicator where you can make a very informative decision when it comes to taking a trade. So I'm gonna go through that with you. Let's start with support and resistance. Okay, so this is just to give you an example of what the supports look like, and basically what's happening here is the stock is the price is going up and down, up and down. You can see that. So what it does is just ignore this side for now. Stock goes up, comes down, hits a low, then goes back up, comes down, hits another low, goes back up, comes down, hits another low. So what you want to do is it creates a support for you. At the same time, on the other hand, it's creating a resistance because that's where it's bouncing off and coming down from. Okay, so what ends up happening is this support and resistance, it's playing along. So this is what we call consolidation. Okay, now all of a sudden this trend line breaks the resistance. Okay, now what it does is there's a breakout. So breakout happens around here. Now what it does is it's now creating a new resistance and a new support. Okay, now keep in mind your previous resistance becomes your new support. Okay, so if we draw a line between our resistance throughout, when the stock broke out, it's going to use that resistance line as a support, okay, going into the future. So keep that in mind, okay? Now, I'm going to show you in a live chart how that support and resistance work. But keep this in mind. This is just an easier way to see what we're doing here, okay? The other option here is for you to see is your trend lines, okay? The trend lines, how you make trend lines is you take your lowest low that happens as part of your support, take your lowest low and you keep connecting the lowest lows, and that's how you make a trend, okay? There's trends within a trend, okay? So if you can see what these guys did was here from the top, when the graph is coming down, you want to build the lines from up top, okay? So when the graph is coming down, you want to connect your highest high to your lowest high, okay? So a graph comes down, extends through. When the trend is broken, it changes directions, okay? Same thing, comes down, if it goes through, it breaks it, again it goes back up. Now what's it doing is overall it's bouncing off your original trend line that you made, this green one from before, okay? Now RSI is basically the strength index. What it does is it tells you if a stock is oversold or overbought, okay? If anything is going above 70, which is sitting at about 80 or 90 RSI, that means the stock is overbought. Don't get into the market at that time. Ideal scenario is you want to get into the market around the 30 or the 20 oversold. This is when people are selling it, okay? And what you want to do is you connect your trend lines, you connect your support, you bring in your candlesticks, and then you make your decision. Does it make sense for me to enter based on my indicators? You connect all 4 dots together and then you enter into that trade. So what you want to do is you look at candles, you look at your trend lines, your support and resistance, and RSI, okay? Here, like I said before, your old support is your new resistance and vice versa. So in the previous example that I showed you, your resistance became your new support, okay? You should always be buying at the support and selling at the resistance, okay? So always support and selling at the resistance. Going back to the graph, buying here, selling here, buying here, selling here, okay? Same thing, buying here, selling here. the other point is you should always have a plan whenever you get into a trade. Okay, what that means is all 4 or 5 indicators that I actually told you about should all come together, and you should have a plan. This is what I want to do, or this is what I'm going to do if this happens. Okay, so you got to bring all your indicators together. It makes a solid decision for you, and then you make a plan based on how you want to take that trade. Okay, I'm gonna show you a live chart. Okay, a live example with support and resistance, RSI, and all of that. Okay, just give me 1 second. Let me pull it up. Here's a live chart. I picked the most common stock for everybody to understand. You can see it's Tesla. Okay, TSLA. That's Tesla stock. Okay, this is a platform that I'm using. It's free at tradingview.com. You just need a Google account or Facebook account, and you can have access to this for free. There is no charges. You don't have to sign up for anything. If you want to go pro, definitely you can sign up for their platform. But I'm just using a free one, which gives you up to 3 to 4 indicators that you can actually use, which I'm actually using here. Sorry, excuse me. Now, just to give you an example, okay, this is when Tesla was around in the March time, okay, when it was dropping, everything was crashing down. As you can see here, this is March 9. This is when the actual pandemic started, okay, peak of the start of the pandemic. You can see trend lines that I drew here from top to bottom and going back. Trend is your friend until it bends, and it then broke the trend here, started going up, and this was just in the second week of April. Okay, now if you see here, you see this red line that's going. The reason why I have this red line is, you see there's a resistance. Okay, we're making a resistance, so I made this red line. Now watch this red line, it will create support. So imagine if we were here at Tesla. Okay, the stock is going up and down, up and down. I made a resistance line here. Okay, watch what it does. It comes down and it bounces off, and it becomes a support. Goes back up, it breaks the support, and then it starts the other way. Okay, now watch this red line. It's continuously using that red line as a support, not just here and there. It's not a big difference in terms of dollar amount, but you can see what it's doing. Okay, at the same time, this blue line right here, I've made a trend line that's going all the way. If I zoom out, you're going to see a trend line that's going, and it's all the way up here, and then I created another trend line. Okay, now you see multiple red lines. These are your support and your resistance. Now I'll tell you, some people actually got in at Tesla around the $70-$80 mark, and they're milking it. Okay, they're sitting on it. There was a reverse split of the stock that happened, and people made a lot of money from this. Unfortunately, I did not get into Tesla, but I was making money on other stocks. There's multiple opportunities. I did not take part in the Tesla bandwagon. So that's what I'm talking about. This is one of those ideal stocks where people are hearing, hey, Tesla's going up, Tesla's going up, Tesla, and the company is at a loss. It has no value right now, but it's just the hype, little that's creating that big, zero news, nothing of that sort, and just people are just following it, people are just buying it, buying, selling, buying, selling. Anyways, going back to the support and resistance, if you can see here, you can see the support. Stocks comes down, we make support, we make resistance, support and resistance. Okay, remember from the first example that I showed you, I was making support and resistance. This is the exact same thing that happened. Went, crossed the resistance line, and then went back up, made a new support. You see that? It's the same line that we created here. Imagine you had no idea what was happening around the 350 270 mark. Okay, you created that support and resistance at this point. Now you don't know what the future is. You pull this up, watch the graph come down, and it hits your support. So your resistance here, it becomes its support. Then it hits your support again. Okay, this is not a coincidence. This is what we were talking about from the beginning. And I showed you an example on a diagram, and this is happening live. Today is January the 10th. Markets are closed right now. That's why you won't see anything moving, tickers moving. It's a weekend, and that's why I am filming this and doing this webinar for you. So you can see in the support and resistance, it bounces, and then goes from there. Okay, now I want to show you another thing that you want to look at. RSI. Remember I told you about RSI, what was happening? You see here RSI at the bottom where the pink section is right here. RSI 30 and 70. You see how over here it's oversold, and at the bottom is undersold. Okay, so what's happening is, if you line this up right here, okay, oversold, and see what's happening here up on top, and people started to sell. Okay, market came down. This is where you would buy. Market goes back up. Okay, so how I would have entered Tesla, okay, if I had this stock and I was analyzing it at that time, I would put 2 and 2 things together. Okay, all the 4 indicators that I told you about. You got your candlesticks. Okay, you got your RSI, you got your trend line. Okay, if I was to take this and just give me 1 second, I'm going to make a trend line up from the top and bottom. This is a trend line. Okay, so I created that trend line for you. Now, so trend line, your support and your resistance, that's 2 checks. Okay, your candlesticks and your RSI, all 4 of them came together at this spot right here. Perfect entry for Tesla. Anybody that was looking to get into Tesla was around the 350, 320, 350, 370, 380 mark. Okay, that was the golden entry point, I would say. Okay, reason why: your RSI was in check. Okay, your candlesticks, now I'm going to show you this candlesticks. You can see it has 1, 2, 3. You remember 1, 2, 3? Those are your part of your indicator. So I'm going to go back here, right here. 1, 2, 3. 3 white soldiers. It also has a bullish abandoned baby. Okay, like a morning star, similar to that. Okay, first we got your RSI. Okay, second you got you see this pattern right here. Okay, for the candlesticks, your support and your resistance, you remember that from previous, support and resistance, and your trend line. Okay, I would have entered the 350, 370, around this, into Tesla. Okay, this would have been my ideal. Okay, there's another one that I'm going to show you, another entry that would have been right here. Let's suppose if you missed it back in September 9th, you had another opportunity to get in for a similar price October 30th. So almost a month in, month and a half. Okay, let's just say 2 months. You can see I'm going to draw a trend line here again. I did not make this new support. It's the same support that's been playing along from before. Okay, it's the same support. You see resistance here, right here. Okay, broke that trend line. Okay, one. Look at the RSI and look at the candles. Okay, you can see the longer the wicks are, the more indecisive the market is. Okay, and you're gonna look for reversals here. Same thing. You have that all four things check out at this point. So number one was your entry around here. Number two, your entry was here. Okay, now I'm going to show you another component. I hope I'm not giving you too much knowledge all at once and it's just overwhelming for you. I'm going to give you another hidden a lot of people don't know how they use RSI. There's a hidden trend line within the RSI that you can use that indicates a selling point. I know we're going off topic, but this is something that just crossed my mind and I thought I'd show you. If you see here, right here, this is where market made a new high. Okay, what that means is market was consolidating, went up, broke all the supports, and made a new high. Okay, so RSI, you can see here, it's high. Okay, what ended up happening was market came down a little bit and then went back up again, went higher and made a new higher high. Okay, so this was our previous high, made a new higher high. But what ended up happening was the opposite in the RSI. If you see, this is a high, this is the other high, but it did not make a new high, it made a lower high. So what that means, you see that trend line is going down. That's one of your indicators on the RSI that the market will do a sell-off. Okay, so what that means is from 518 coming to 308, when you have hundreds of thousands of dollars invested in, that's a $200 drop. Okay, this is something to look out for. This is just a bonus that I'm giving you, and I mentioned that bonus before. This is something that crossed my mind. I wanted to share it with you guys. Plus the four indicators, this would be your other indicators. If you wanted to see, hey, the market is going down, I want to enter at the right point. So you're already thinking ahead of the game. Okay, this is something to give you from before. I'll show you another example of an RSI where there's a reversal. Okay, just give me a second. Right here, if you see here, the market made a new high up on top, then made another high. Okay, what's happening here? Made a high, high, but you can see there was a drop from this point. There was a drop, and there's a mini RSI drop here. You see, this point was high, this was higher, but it was a lower on the RSI. So RSI is the opposite that you're looking at. It's one of the indicators. It's a bonus indicator that actually tells you. So if you wanted to get out of the market and re-enter in with a profit from 655 to 565, so almost $100 drop. I hope you're understanding this, and I'm going as slow as possible for you. You see, I have another trend line that's going because Tesla is not following some of the rules, and is just, the hype is just taking it to the next level here. You see, this was my previous blue trend line. It's supposed to bounce off and slowly, gradually go up, but it just went the other way, and it's going back up almost at a 90-degree angle. If you can see here, I made a new trend line that's going. So hopefully it uses this trend line and it bounces off. So around that price range. So that's one of the components that I wanted to tell you. I have another one that I want to share, the patterns. You remember the patterns I told you about here. Patterns. I'm going to show you this exact pattern that actually happened to Tesla at the point where I told you that this would have been your ideal entry. Okay. This was a pattern where the market went up, came down, consolidated. This is what I was telling you. Some people like to trade at this point. They trade at support and resistance. So this would have been another resistance. Okay, let me draw that out for you so this way you guys understand. This would have been another resistance, and this is what a lot of people buy and sell, buy and sell. If you had entered the market at this point, or at this point where it actually completed the flag and it did a breakout, you can see this as a breakout. It went the other way. If you compare it to the chart that I showed you previously, it's a perfect match. Okay, now I'm just showing you as an example, but look at this. Beautiful. This came right here. Beautiful breakout, beautiful way of the patterns, your indicators, your trend lines, your RSI, your candlesticks, your volume, multiple things all coming together along, and so you can make an informed decision, and you enter at this point. And if you did get into it, you're lucky, one of the lucky ones. A lot of people still sitting at 600, 800, some people still buying at that high price. Okay, now let's move on to our risk management. Very important here. Risk management, trading with how much percentage of your entire portfolio. So you don't want to put all your eggs in one basket. If you started with 10,000, you want to go all in on Tesla with 10,000. Okay, Tesla could have gone the other way and wiped you out. Remember my first drawing that I showed you? It was all crappy and random. That's how you were looking at charts in the beginning. That was my whole point. Now, so far, hopefully you have gained some sort of knowledge, and you have obtained some indicators, and you can make an informed decision based on that. But never go into the market with the 100% of your portfolio. Put 30% for a certain sector, 30% for another sector, 20%, 10%, however you want to do it. It's up to you. It's your money. But nobody does 100%. Okay. The other thing people don't know, most of the new traders that got in 2020, they have no idea what a stop loss is. They have no idea how to do a trade plan. Okay. There's certain type of ratios that you want to play with. I usually do 2 to 1 and 3 to 1, and I'm going to give you an example of those two ratios. A lot of people ask me, hey, do you do swing trades? Do you do day trading? I would love to do day trading. Unfortunately, I have this I'm doing on the side. I have a business that I run, but day trading, it's too time consuming for me. But I do swing trades. Swing trades are usually last between 2 weeks to about 4 weeks, maybe sometimes 2 months, depending how big it is. And it gives you a really big payout. Day trading, you can make as much. Nothing wrong with day trading. People do it for a living. People made a lot of money, but it's just maybe that's their style, and they just want to be engaged throughout the day with all these stocks. They trade 3 to 4 or 5 stocks in a day, and they can make as much as I will make in about a month. But for me, I like to take things slowly, analyze things, and do trades based on 2 weeks, 3 weeks, 4 weeks, and 5 weeks. depending on how good the pattern is that's showing. I'm going to show you that example as well that I told you earlier. There's multiple patterns. There's the flag patterns I showed you. There's wedges, there's head and shoulders, there's cup and handle. I'll show you an example of a cup and handle that I have, and I've previously traded that multiple times. Now going to the example, 2-to-1 ratio example. Okay, let's suppose, I hope you're writing this down, you understand it. Sometimes people understand it by writing down, sometimes people see it and they make sense out of it. Let's suppose you have 100 shares and you bought 100 shares at $20. Okay, your target profit, a lot of people call it TP. TP stands for target profit. Target profit, you said, hey, I want a target profit $30, so that's $10 of profit that you're looking at. Okay, now people don't know what a stop loss is. Stop loss is basically it's I mentioned here, it's how much you're willing to lose on a specific trade. Okay, so in this scenario, the stop loss, I put it just as an example, $15. Okay, just to make things easier. Okay, so you bought 100 shares at $20 and your target profit was 30. Your stop loss was 15. That means you are risking $5 to make $10. Okay, that's 2-to-1 ratio. Okay, risking 5 to make 10. Okay, now just to give you another example of 3-to-1. Now what that is same thing. Now I'm gonna make it a little bit more practical of what happens in trades that I get into. I usually trade around penny stocks. Sometimes I play around with the penny stocks, but usually $1.50, $2 stocks to all the way to $20 to $30 stocks. I don't do sorry, excuse me. I don't do big stocks. Yeah, you know, large stocks like Apple, Tesla, Amazon. I don't touch those unless I see something for a very long, you know, long run. Yeah, I can put it down, but usually I do between 2 to 20, 30. Okay, so this is just a practical example. One of the trades that I usually do is, let's suppose I bought 100 shares at $5. Okay, you got a really good price at $5 and your TP is 6. Okay, you put a stop loss at $4.70. What that means is you're risking 30 cents to make $1. Okay, that's 3-to-1 ratio. Okay, now let me tell you something. It's very interesting. Okay, let's suppose out of 3 trades, even if you lose 2, that's 33%, but you will still end up making profit. Okay, for example, because I'm only risking 30 cents on each trade. Okay, so 2 trades, 30 cents I lost. Second trade, I lost 30 cents. That's a total of 60 cents. But my third trade, I ended up making $1. Okay, so if you minus out the 30, okay, that's 60. I'm still up 40 cents. Even though my winning percentage, if you see, is 33%, I still made money. Okay, so keep that in mind. I usually use the 3-to-1. That's my favorite go-to. But if I see a really good opportunity, I go to 2-and-1 as well. Okay. Remember, I explained to you that I wanted to show you an example of a cup and handle trade. Cup and handle is basically same thing. Trend lines going up, starts to consolidate. Okay, consolidation is basically when people are deciding market is going sideways. They don't know what to do. A lot of buying and selling evenly happening. Nobody is in control at that time. Now you draw a cup. If I take those lines away, you'll see automatically. You'll see a cup being drawn with the handle, and your breakout point would have been in this point right here, and you would have made from, you know, money here. This is just to give you a small example. Now, you could have made money here, entering in at this point, selling at this point, or even I don't have the continuation of this. This is just an example that I got off of Google, but I'm sure this, usually when it's a cup and handle, is one of the best trades to have in your portfolio. It's usually the same size, so about, let's say if this was 88 and the breakout point was 90, so $10, so it would have been a nice $10 profit target from the entry point here. But here, what I want to show you, there's another entry. When you take this, imagine this right here, and back here, this would have been your support and your resistance. You see that? So it bounced off here. You would have seen indicators, you would have matched the volume, and you would have matched your RSI and your trend lines. Everything all in comes together. You would have entered the market around here as well. Okay, so you probably had two chances of entry, one here and one here. Okay. My favorite analogies, think of trading as flipping a coin. Every trade you take, it's a one coin flip, but the chances are 50-50. Okay, you're essentially gambling. Like people say, hey, we're not gambling. If you have zero knowledge and you're just following, 100% you guys are gambling. Okay, when you have the knowledge that I just gave you, the indicators that I gave you, how to look at charts and all of that, you will take that chance, make it 60-40, 70-30, 80-20. You grab those odds and you take them in your favor. Okay, luck also plays a big role, and there's always circumstances out of your control. You know, it's like COVID 2020. Nobody expected COVID to be around for this long, but you saw how, you know, some people got really lucky. They had no idea. They were sitting at home. They're like, okay, you know what? I'll just put money in Tesla. I'll put money in Bitcoin. I'll put money in XYZ. And then from there on, they ended up, you know, putting in 10,000 and ended up turning into 100,000. Okay. Now they think they made so much money and they're experts in trading. That was just pure luck. Okay. What you need is the knowledge. This is just lesson one. Imagine what's coming to you next. Okay, so if you have all that knowledge in you and you can make a better decision, you will have better 2021. Okay, all these guys who are playing off of luck, their luck is going to run out because the market was trending up. So no matter what point you got into any stocks, the market was just going up. So people made money. Yes, now it's the actual testing. 2021 is when the market will be consolidating and market will be going sideways. I'm not a guru. I'm not an expert. Maybe it goes, it'll go up furthermore, but I know 2021 will be a little bit more stable. A lot of companies have, you know, recovered, and more of a consolidation play will start. And people who don't know, people don't have the knowledge, will not be making money in 2021. Okay, so it's very important to take this seriously and study your candlesticks, study the pattern. It doesn't take too long. You'll grab it within 15 minutes, half an hour. You'll understand the logic, the psychology behind all of that. Okay. Again, how do you get better in trading? You keep flipping that coin, you keep trading, you keep going. Okay, practice, practice, practice. And I can't emphasize that enough. Practice as much as you can. You want to practice on a dummy account, you can go in with your money, with your actual money, live account. As long as you have your risk management in control, you would be fine. Okay, I hope I have changed your point of view and I've added a little bit more knowledge and skills to your trading, and wish you guys all the best and good luck.